right.
I like your Bobcat picture.
Oh, thanks.
I have 3 of them, which make no money.
Yeah, I'm in the same boat.
Yeah.
It takes a little bit of tinkering, I've discovered. It's not like the plug and play, as advertised. There's a little bit more technical knowledge that goes into it than most people anticipate, right?
Yep.
Cool. Well, here's me.
Yeah, I think I can turn this one on here. Great.
Cool background.
That's from the Zoom backgrounds pack.
All right on. Yeah, I had someone last week put on one of the meta backgrounds. I go, that looks like the meta background that Mark was on, or whatever is, I forget the guy's last name, Facebook dude.
Yeah. Zuckerberg.
Yeah, Zuckerberg. So to give you some context, what I'm doing is I'm interviewing metaverse, NFT, blockchain business experts, real world applications of business in this new Web 3.0 space. And coming from DeFi and crypto, I'm basically expanding and journeying out so that people that are following or watching podcasts, they can get some inspiration and not just inspiration, but do something about it.
Very cool.
So tell me a little bit about what it is that you do.
So I've been into blockchain stuff forever. I'd say forever, dating back to like 2012. I was building Bitcoin rigs with my bare hands when Bitcoin was $4. Unfortunately, I don't still have all those that when they were $4.
Oh, you were buying pizza, weren't you?
I'd be on the beach or something right now instead of talking here. But yeah, I had like 15 machines running at one time. Then it became woefully unprofitable. Sold all those off. I've also have like a finance background. I was in banking for almost 10 years. So if it's DeFi, decentralized finance, I'm the true combination of finance and decentralization stuff. So after, I don't know, maybe like 2016, 2017, I started working in blockchain stuff full time. And over the last 2.5 years, started getting a lot more serious about, doing advisory stuff for some projects, being more involved in launching other projects, perfecting trading plays and like delta neutral hedge type positions in DeFi, to where one of the ventures I'm in, we're starting like a full-blown registered hedge fund that will be US based, where as they're normally not, but it's a lot of cost and uphill battle to get approved with the SEC, CFTC, and NFA, but we will be in about 30 days. So we've got that running on the crypto side. And then we talked about on the NFT and crypto projects, our physical art related project, the Motel NFT.
Okay, gotcha. Before I get into the Motel NFT project with you, this fund that you're creating, like what kind of costs, I know it's expensive, but what kind of costs are associated with all of the registration, licensing, attorneys, and how much do those amount to?
It's different depending on how you want to do it, who you use. I know it's probably not the answer you want, but our setup is a little bit more complicated because we want to use some version of futures, options, leverage, and anytime, even in the crypto world, you start doing those kinds of plays, even using like a 3x ETH behind the token on FTX or something, you're automatically forced into not just registering with the SEC, also the CFTC, which is the Commodity and Futures Trading Commission, and then the NFA, which is National Futures Association. So you also need to be then registered as what's called a commodity pool operator. So whoever in the fund is either talking to clients, talking to potential investors, turning the levers, doing the trades, actually also have to have their Series 3, which is like the options version, whereas Series 7 is for typical like stocks and equities. So all that being said, Our setup was a little bit more complex than just maybe a crypto fund that wants to bring in investor money and go out and buy Bitcoin and ETH when it's cheap and then sit back and pray. We don't buy any individual tokens whatsoever. So in our world, we might have like a 3x long yield farming position with Solana on Solana, and have like an equal amount short on a perpetual futures contract on KuCoin or something. So as one is going down, the other one goes up, and vice versa, and the yield farm is making like 100% APY. So we have safer plays which average out to maybe 20-30% APY. It's not going to be like a moonshot, making 10,000% like some individual tokens have done over the last couple of years, all of which now are pretty much gone or down significantly. But we're not susceptible to market volatility and stuff that it would is crushing most funds that are into crypto right now, which is kind of our unique offering. So the investors that we're going after, this is another important thing if you want to start a fund, is they can only be accredited. And now this newer super accredited, which actually means they need to have like $2 million of total assets instead of the original accredited, which is like 1 million. So the minimum for our fund is 100 grand to come in, and there's no like time limit or minimum, so people can come and go as they want. And we're not supposed to be soliciting yet, but we do have sort of just been generally talking to some bigger investors we know, family offices and stuff, and have pretty significant soft commitments. And we're allowed to go up to 150 million.
Gotcha. So you're keeping the rules. I mean, that.
And no advertising is allowed.
Gotcha.
So to answer your original question, it could be like the absolute cheapest if you're just doing individual crypto stuff and want to be in the States, probably $40,000 all in. And as you get more complicated, and in some cases need like an offshore wholly owned subsidiary to control the trading accounts that require them to be outside the United States and all sorts of other stuff, it's more legal hours, and it's going to be closer to 80, 90, 100,000.
Oh, wow.
And it's not just the setup. You also have to have a fund administrator that actually like does all the KYC, AML on all investors that are coming in. So they're putting they're signing off on it. You have to know which banks actually accept these kinds of funds to sign up with, because a lot of them most don't accept any kind of crypto related businesses. So we've navigated all of those hurdles, and it's I'd say that our attorneys are earning the money that we're paying them.
Oh, okay, interesting. Yeah, the banks that don't accept crypto related businesses, my credit union, I got through like part of the process of setting up my business account, and then they were like, we can't help you.
Right.
It's just consulting.
There's very few.
No. You can't do it.
Accepting crypto is one thing. Accepting large amounts of crypto or investments with the anticipation that they're investors that want to go up, that's even a whole nother range of risk in their eyes.
Gotcha. So then what then encouraged you to move from like DeFi and then over to the NFT project that you're in now? What's the inspiration there?
We've always been involved, me and a few partners of mine, on a couple different, on at least 3 things at once. So we've consulted certain projects on like architecting their tokenomics model, and usually trying to find some real world component in linking the real world with the crypto world, because usually that's how you create real value. Because you can mint a bazillion tokens, you can get influencers, but at the end of the day, if the token's only going up or down because of public sentiment, and there's no real world company that's bringing in real world revenue that's driving the token price up for that reason, either through programmatic buying or a fee based thing or burning, then the project is usually going to go away, like most of them are right now. So I've always been involved in a bunch of different projects. And so through my partner in the fund, we got introduced to this art gallery in Florida, and it was just a perfect match because he had 30 plus years of experience in the real art world and knows everything, and has, $250 million worth of physical art in his 8,000 square foot art gallery, and wanted to get into turning them into NFTs and we showed them the coolest way to do that, which is the new breed of fractionalizing, where it's not using an ERC20 token, which does infringe more on the SEC violation side, where we are creating fractions on one NFT that are all the same, and we're just minting more NFTs that are the fractions. So for every one NFT that is like the certificate of authenticity for one physical painting, that one NFT gets locked into a smart contract or vault, and then it spawns, let's say 10,000. So we chose 10,000 for this new one, so we can sell the fractions at roughly, $150, $200 a piece, depending on where ETH is. Right now, it's probably close to $100 per fraction, which is actually a steal now. And in most cases, there's going to be 10,000 people or 5,000 people that own those 10,000 fractions. But in a case where one person, either buys them all at once when it goes live, or they go around and buy up the others as they become available, the smart contract does have the capability of having all 10,000 redeposited, and then whoever has all 10,000 and deposits those actually gets issued in their wallet the original. And then once you have the original, you can walk into the physical art gallery and literally take home the multi-million-dollar painting.
Oh, well, that's a really interesting concept. I mean, the idea of like fractionalized ownership, it's been around for a long time, even real estate, and tenancy common and those types of things.
Right.
But now that, like, for example, real estate coming to blockchain, or real estate debt, for example, fractionalizing the debt, which is easier to do. Just these new concepts. I think I was talking to you in the chat about owning a piece of a Banksy. I used, like, in my old office, I used to have like a stencil of the Mona Lisa with a bazooka, and it was like just sat in my background. So if I was talking to someone, they'd go, "What's that? Oh, this thing back here,"
That's right.
But it was just like the cheap, $20 stencil I got on Amazon. But actually owning a piece of it, fractionalized, that's for me, that sentiment would be
exactly. So it's important to kind of distinguish the two different ways of fractionalizing. So up until fairly recently, there have been like NFTX is one platform that does it. There are some where they'll say, hey, put one or more NFTs in this vault, and we're going to mint this new token that could be called, let's say you take a CryptoPunk worth $1 million, and you lock it in the vault, and it creates these tokens. Those tokens then get paired with ETH, put on Uniswap, and traded more like a stock. And not only is that closer to the gray area of is it a security or not, and that whole kind of thing, because you're really more clearly speculating on the price, in that not only are you trading tokens on an exchange, be it decentralized or not, but you don't ever receive anything that even shows the picture of the thing that you bought. So much different from that model is this newer breed of fractionalization, where we take the original NFT, we lock it in the vault the same way, but instead of getting tokens out, brand new tokens called like the Andy Warhol token or whatever it is that represents the Andy Warhol painting that we just fractionalized, we're minting 10,000 new NFTs that look exactly like the original, except it has a little icon in the corner that says like, hey, this is a fraction of the original, not the actual original. So because the original is locked in that vault, no one will actually have the one that has no icon in the corner until they own all the fractions, if that ever happens. So the coolest part is that, let's say you buy even just one fraction, and now you've got it in your MetaMask wallet or any, whatever, however you view your NFTs, you can now show that either on your phone or on a screen or on a digital display like Black Dove has. We have a partnership with Black Dove. So they're getting their digital NFT display screens into all the big trade shows, into like physical art galleries on Madison Avenue and all of the best cities and stuff like that. And so they actually are gearing their model towards like a subscription service of them being the ultimate curators, or individuals can curate. So they're selling subscriptions where, yes, they sell the hardware, but they're really in the subscription business of getting people to have like the coolest reel of NFTs that display, where the curators or creators, we'd be considered like a curator since we have many paintings that we own, but we didn't paint. So we'd be known as a curator. So we actually earn like little bits of money when ours, like paying, like earning on impressions with Google AdSense kind of thing. So in their ecosystem, even though it looks like people are just like looking at art, they're actually like ad impressions.
Oh, interesting. So who would be, or how do you, other than like selling the fractional pieces of the art, what are other ways of monetizing this? Because you were mentioning like with some of the other NFT
Mhm.
projects, they would then pair it and then trade it, right?
Yep. So ours, right. So even though we're not supposed to say, hey, buy this, it's going to go up in value, because then it would be treating it more like a security. It is more like a collectible, we believe, because you're actually getting the NFT to look at, to view, to show on your phone, to show on a screen, and so on. So if you're personally and emotionally connected to whatever that image is, maybe you just like it, or maybe you think it is going to go up in value as the price of all Andy Warhol paintings go up in value. So I don't know if you just saw, but the most expensive Warhol ever just sold for like over $100 million, some crazy thing. And we actually know the guy that bought that physical painting, and we're in talks with him to potentially fractionalize that one too. But this first one that we did is the Andy Warhol of Jason Pollock, and it's one of one. So I don't know how much you know about Andy Warhol, but he usually had like 300, 400, where he would do like a screen print and then like hand painted. Like there'd be something unique about it, but they really mostly look the same. But this was a unique one where it was hand finger painted, and it was one of one from 1978, I believe. And so the painting, could sell for $2 million, and that's what we fractionalized as the first piece. But we do have a Banksy. We have a number of other Warhols like Mick Jagger, which I really like since I love the Stones. And so if we can gain, the kind of traction we'd like to, then we could be doing, 2 or 3 of these per month. And in terms of like long-term appreciation, there is a company that's been sort of fractionalizing real world art called Masterworks, but they do it in a totally different model. It's really kind of just old fashioned, where like they'll create like a fund, an investment fund, and the fund will buy, Picasso or like a series of high-end paintings. And then as those go up in value, whoever bought into the fund, obviously their units go up in value. So this is not that, but it could behave sort of the same way, where let's say, Warhol paintings go up, 10, 20% per year for the next 5 years. Those who own and are trading these shares in the form of these fractional NFTs on OpenSea, on Rarible, where we're starting to list some, and some of the buyers are now trying to resell them right now. Obviously, that could create a real market, and that could go up in value.
In terms of traction, traction and marketing and adoption, are there other platforms like gaming or anything like that you would display any of this fine art in?
Yes, it's interesting you mentioned that. So this last weekend, I was at the NFT Metaverse Expo in Las Vegas, and we were talking to 2 different kind of metaverse organizers about creating an art gallery in their metaverse, and we would, be featuring all these paintings virtually, but inside the metaverse there. So that is something that we can do, and we very likely will be doing that.
Interesting. I was walking around with my avatar in Decentraland, and my friend from JP Morgan is like, hey, go check out our lounge that Onyx did, or the Onyx lounge that Every Realm, I think, was the creator of that. And I was like looking around, I'm like, oh, this is kind of nice, but there wasn't anything unique that stood out about it in terms of like designer furniture or fine art or anything like that. Nothing like super cool displayed, right?
Yeah.
And I could see a project like yours where, you have maybe JP Morgan, as they're building out their Web3 part and their presence there, maybe they don't want to invest wholly in like a Banksy or something, but maybe they're open to fractionalized art and that they can display, and then it has, your so I don't know about your logo, but like your branding to it somehow, right?
Sure. Yeah, absolutely. There's limitless possibilities nowadays.
Interesting. Well, I've got another call coming up in 8 minutes, so I wanted to wrap it up. But let's say if
someone that is an art collector but doesn't know much about digital art and NFTs, what kind of advice would you give to those types of collectors?
It is interesting because we've identified our two ideal customer profiles are like the crypto bros and the NFT enthusiasts that maybe have been burned or they're sour right now because they were buying useless JPEGs and now they want to start looking into something that's tied to something real. And then on the other side of the spectrum, we have your traditional art collector like the person you're maybe describing. And so they've never maybe bought an NFT in their life, but they really like Warhol, or they really like Banksy or Picasso. And now they want to dip their toe in the water, and maybe this is like the first one that they buy. So that's really how we designed this. We made sure to partner with the right merchants that would allow us to accept just regular credit and debit cards on our website. And we also are trying to be as transparent and authentic as possible. So we actually have set up in the physical art gallery a camera aimed at the actual painting where people that want to go on, YouTube or our channel and see it and say, no, okay, I own a fraction of it and I trust these guys, but oh, I can also look and see that it's real. And I can hear Kenny in the background telling some funny story about what he did at Rachel's last night. So we're trying to be transparent. Is that going to be scalable when we have 20 of these at the art gallery? Maybe, maybe not, or we'll have it on a cycle. But for the new collector, I think fractional is the way to go because you can usually find something that's relatively inexpensive compared to buying the original and maybe buy just a handful of fractions in a variety of pieces that really beefs up your collection on your phone or however you display or show off your NFTs, or maybe you want to make it, your avatar on Twitter. And that's a whole nother controversy is like, okay, if you own a fraction of a CryptoPunk, are you even allowed, should you be allowed to show that as your avatar on Twitter when the guy next to you maybe paid $500,000 for his and he shows it as his customer or his profile? So
Yeah, that brings up a really interesting topic, and how much can you flex when you own like
exactly.
a fraction of it, but that's
right.
that'll be interesting to sort out.
Yep. So the only way you can with our kind of fractionals is going to the collection page on OpenSea or something and seeing like, okay, well, who's the biggest holder of the fractionals within this piece?
Gotcha. Well, very cool. I appreciate your time on here. Thanks for coming on and sharing, Joe.
All right. Thank you for the opportunity and have a great day.
All right, you too.